All right. This is apparently seventh. This is the seventh day of April, and this is price action so far. I think I already have a clip on this, so I'm just going to remove this stuff. Okay. Let me basically allow whatever was there be there. Um. So what has been happening thus far? You can see April has been in more like a consolidation phase. Yeah. So we're currently having a consolidation. But prior to our consolidation on a higher time frame, I'm seeing now let's move over. Okay. So the previous month, which was March, was pretty much bearish, but we failed to close below this guy and we reversed. So let me bring it down to the weekly. In essence, you see on the monthly, I am bullish, but the momentum is not large. Now, this was the closing week for March. This was Monday 23rd. All right, so that week it kind of it intertwines with April. I think the 2nd of April was basically on Thursday of that said week of this Monday, the 23rd. So the week closed at 3rd and April opened. So you see us have this reversal right here. So I saw this reversal candle. This is the candle 2 closure. All right. So candle 2 closure, liquidity swept, changing the state of delivery. So the anticipation was what? Last week, all right, was going to be bullish. That was our anticipation, or rather my anticipation. I wanted to see price fill this gap. Now, do I have price tapping into the gap? Yes. Did I close above previous week's candle? Yes. All right. So this one gave me a pointer that, okay, we might be bullish for this week. But in all, you see how price has been moving sideways since I hate to see this. Since 26th of January. So since on the 26th of January, price has been moving sideways and we only took out that low, that body wise, like we took it body wise 16th March. How many weeks? One, two, three, 4, 5, 6. That's already 1 month and 2 weeks. Then we have 1, 2. So we had an entirety of 1 month and 2 weeks. Price was not taken out where? Price was not taken out this high. If we are looking at Monday 26th and we count 1, 2, 3, 4, 5. So in 5 good weeks, we could not close above this high. And suddenly price did what? Created a change in the state of delivery on a lower time frame. That's important because this liquidity level is important because as you can see on the 23rd of February, that week, all right, the February contract expired. And then we had March contract open for trading on what? Monday the 2nd. And that opening contract for March basically did what? Took out liquidity and then dropped, creating what? A change in the state of delivery and we continued second week of March and rode it down where third week of March. Target being where? Target being the lows from what? Um, 2nd February. But before I divulge further and start explaining all the other things, now I have these levels for certain reasons. All right. But primarily, you just want simple few lines, which is what? Your previous, you just want your previous week. Um, okay. Basically, not just the previous week. Yes, you're using the previous week CROT, but you want to take what? As far back as what? Say 3 weeks. All right. So you want to spread your view. If you're spreading your view, looking for where is price most likely going to be drawn to? So that's the whole idea. You recall me saying you can't force the market. It's not like you can't tell. It's like having there's an adage that says what an old man sees sitting down, a child standing, all right, would not see. Now it's not necessarily because even if the child climbs a light tower, all right, it doesn't go to say the child won't see as far, all right, into the fields, the vast land, even beyond the point of what the elder is saying. But it's all based off of experience. Like the only way to get things done is to actually be involved, is to start. Like there are no ways. So having that knowledge, the elderly person with a lot of experience can tell. So when you cook up experience, you just have an idea that okay, if price does this or price does that, all right, chances are what? I'll do this. You gain that edge. And that is why, as a trader, trust me, I want you to focus on what? Your edge. Focus on building your edge. You're very lucky to be watching this because I paid the utmost price to have this knowledge given to you for free. Yes, is the knowledge free? Yes, but you have to work hard on it. You need to work hard for it, rather. So let me just put out this high here. So this was the past 3 weeks. So you can see how this high is becoming what? This high is becoming a support for price. That's 60 62 645. 60 645 645. Sharp. This low comes at 600 850. So you already have an idea here. This is what I was looking at the CRT level for the previous week. All right. So my idea for this week is I want to see price. All right. Fill this gap. But then if price does not fill this gap, what is happening here? You recall me saying price created a change in the state of delivery. Now, on the lower time frame, outside of the monthly, I'm looking at what? A weekly change in the state of delivery here. So I want to see maybe this week trade up, which is basically the first trading week of the month of April. So this feels like what? An accumulation leg. I want to see, the market is really choppy, to be honest. All right. Top to the whole Iran news, the global impact on energies. I mean, it's been a chaotic market. But then there has been volatility as well. Because a lot of now the reason for this hold up, the reason for this hold up and slow movement in gold, one might be asking that when there is global instability, all right, people are more likely to buy what? Gold. That is what you'd be thinking because what? there's a global listen. No, but you need to study how price would move. If oil is having serious issues right now, it means it is good for what? The world reserve currency. If oil prices are going up to the moon, I think it's about $110 per barrel now, it means that there is something impactful with what? The greenback, the world's backup currency. And when that happens, central banks are no longer looking to hold gold. Now, this is where it gets tricky. They're no longer looking to hold gold, at least at so much value. Why? Keeping the dollars would actually give you what? A good return on investment. So that's how countries are also making like investments as well. So they are yielding increase on their what? On their mutual funds. So, man, if you're watching this, I just hope you understand, man. So this is the whole process to it. You have to enjoy it because I'm not teaching you how to just see green candle buy, red candle sell. I'm not just saying press this button. No, 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 no. If you're listening to this rant, if you wish to call it that, these are basically what you need to do. They are just a way to get by. All right. So for this week, I want to see maybe price trade above what previous week high. So if we take this high at 4,800 and we close back inside of this 4,800, I would have a feeling that what this change in the state of delivery we have on a weekly level, which is at 4,833 and 89 cents. I want to see that point holding, meaning I will definitely be looking to do what? I'll definitely be looking to sell the next week. So that would mean that the candle 2 for April, which is like Monday 13th, all right, that week, I would want to see what? Lower prices. So this time of the market, you want to be careful. You don't just want to risk so much. All right? You don't want to risk so much. You don't want to be exposed. Now, is the market buying currently? Do we have a bullish condition? Yes. But if you noticed when I opened the monthly, let me go back. You understand this is what? A bearish engulfing candle. It takes out, see, just 1 month candle takes out the entirety of these liquidities we have here. It took out 3 months worth of liquidity and also tapped into what? An internal range on a fourth week, on a fourth month. So that's like 4 months. But clearly you can see us sweep these 3 months. We swept the low of December. We swept the low of January. We took out the low of what? February. And we still closed below, body-wise, below what? February. In 1 month. And if you understand market cycle, you would understand that after large ranges, all right? So whenever price does or puts in this kind of impulsive dumps into the market, technically a new phase of price would occur, which is going to be what? A retracement or what? A consolidatory phase. So the market is either going to retrace, and retracement in this scenario now would be like what I showed you on the weekly. So you have a bullish momentum. As you can see, the month of April has opened, and when it opened, it traded lower into some sort of level, all right? And then doing what? It's buying. But the buying momentum cannot even be compared to the body of this candle. Even the week, we are not even respecting 25%. Like, we are not respecting. If you get, when I say weeks now, that would be, if you put your Fibonacci tool, all right, you take from the close of this candle to the low of the week. That automatically tells you that, okay, if this market is going to buy, you want to see, which is the second quarter. Anyways, if we are going to buy, really, we would want to see what? Price trade its way to at least equilibrium of this week, or expect what? 0.5. You respect 0.5 of the upper quadrant of this week, and then we ascend. But just look at this massive body and look at what price has done. So anyways, this is the first what? The first week. So let's still watch the market. Let us anticipate. Don't just say this is going to buy and be very impulsive. You see the massive run price has had in the what? The past 4 weeks. Very impressive. And you see this guy that has been trying to buy for 3 weeks. You see how shallow the bodies are. So that gives us the idea that, okay, I'm saying this level here, I want to see this order block. This 1, 2, 3, 4. These are consecutive order blocks on what? The weekly time frame. It's one continuous candle. It's just one whole candle on the monthly time frame. But anyways, now for a buy scenario, I just explained what I'll be expecting. I want to see this week now, this current week, trade maybe above these highs, and then do what? Close back inside. If it closes back inside, next week is going to be what? A continuation to the downside, targeting 4,417. All right, 4,417. So that is the level we'll be targeting, and maybe any level lower again. Yes. But if that doesn't happen, and then we have this week trade above this high and closes out what? Impulsively, body wise, if we have a candle closure above those highs, then the next week we are best looking for what? I'll be looking for what? A continuation to the upside. So let me move down to XAU. Now, the thing is, silver and gold sometimes move in tandem, but I don't really use them for SMT per se. I don't really use them for SMT. Now, I would be showing you one more video of the pound and euro and how they correlate. I've talked about it a lot because it's something I use a lot. I mean, SMT, smart money trap is very, 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 very impressive. All right, it's it's an impressive strategy. If you have your smart money trap aligned with your CRT, trust me, you are going to be raking in what? Massively. Okay, so that's that for that. See us on the daily time frame here. This previous week, all right? This is the previous week. And this is where we opened for this week. So you can see Monday putting in the low of the week for now, but we've not taken out any significant any significant level. We obviously repriced into this fair value gap here. We basically repriced into this fair value gap here. And prior to that, Friday of the previous week had already retested this zone and closed above. So I would be looking for a buy, suspecting these highs. If tomorrow this candle, the market is still open. Let me see how many. Ouch. Okay, so I think the gold market already closed. What's the time? No, 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 the market closed like an hour ago. I believe 56 minutes ago. Anyways, you see the bullish momentum still forming here on what? On gold. Meaning we are targeting these highs. We are targeting the 4,800 level. All right, so that's my catch so far for XAUSD. Let me introduce something. Session breaks. Session breaks are very cool because automatically it tells us where previous day trading closed, and so we have this Friday low here, and subsequently we can see price just breaking above. When we opened for this week, you see us running above. We are retesting it. We are retesting the opening price, and we are staying what? We are staying away from it. We are running away from it. We are going higher. Also confirming what? Now, the higher time frame structure I saw, I'm confirming it now on the lower time frame. So this was Monday's trading for gold. This was where the weekly price opened at 4,638.250. All right, that's where we opened. And on Tuesday, you see Asia run down that level, tapped what? This other block, which is also the weekly fair value gap. So now we have what? An inversion. So price has run through that fair value gap, all right, rejected it in some way, repriced into it again, and is also what? Respecting the consequent encroachment of this gap. So now, this fair value gap, when I say consequent encroachment, basically it is the midpoint of the fair value gap. That imbalance, the midpoint of it, the mid fib level, the mid range, is the consequent encroachment. So Asia traded down into it, all right, and London created a false move that it was going to buy, but then did what? Tanked lower, creating what? Creating a false change in the state of delivery. Because why? We were still closing what? Back above opening price, the weekly open price. So finally, we had a run during the PM session, and then we sent price higher towards the close. So now we've been able to take out what? Liquidity for Monday. Now, this is another scenario that might happen. Remember, I talked about a fair value gap. Now, this is a new territory. That gap we have now, we've tapped into it on the higher time frame. So this is the 240 minutes chart, and I've tapped into this level. If you look to the left, what else do you have here? We have a breaker block. Outside of this run, this fair value gap, we have what? A breaker block. Now, since I've seen that breaker block, I don't really trade breaker blocks. All right? I'm just another block person. So let me just tell you why I'm explaining this thing now. For every trade criteria, so I'm looking for something to happen. I'm looking for a liquidity sweep. Now, a liquidity sweep might be previous highs or lows. All right. Now, if that confirms also with what? London since it's mostly intraday. All right. Now I'm breaking it down to also session liquidities. So session liquidities, you want to see Asia highs swept, London lows raided.